Well, other news tonight, the Federal Reserve is meeting this week and is expected to continue raising interest rates in an effort to fight stubborn inflation.
Fox 26 business reporter Tom Ziska looking at what will go into the decision. Tom.
Rashi, Jonathan, good evening to you. Wednesday's expected announcement would be the 7th straight rate hike to mark the most aggressive pace since the early 1980s. That's the last time inflation was as high as we see it today.
We should expect a fairly flattish read for inflation for the month of November.
Houston financial strategist Lance Roberts says the last piece of the financial puzzle that the Fed will examine is Tuesday's Labor Department report on monthly inflation. The pace slowed slightly in October, and a similar report for November could encourage the central bank to be less aggressive. But while there are some hints that hiring may be slowing, the last definitive report shows robust job growth and bigger paychecks, which means money to be spent. After 4 straight months of 0.75% rate hikes, Roberts says there's a chance anything smaller could be misinterpreted.
I suspect that on Wednesday, when the Fed delivers their 50 basis points rate hike, that we could see a very hawkish Jerome Powell making sure the market understands, yes, we're slowing the pace of rate hikes, but we are going to continue to hike rates until inflation comes down. The markets may not like that.
But while the markets may not like the continued hikes, consumers will like it even less as borrowing costs will continue to rise. Credit cards, auto loans, and mortgages indirectly will all get more expensive. What's worse, the effect of rate hikes is largely psychological for now, while it often takes 9 to 12 months for an economy to fully respond to higher costs.
This is going to be problematic in the second half of next year as these rate hikes really start to impact economic activity, which is what the Fed wants.
So a 0.5% interest rate hike is expected Wednesday, and while the economy could really start responding, slowing early next year, now is the time for consumers to plan for that, reducing their credit and household debt, finding places in a budget that can be trimmed and saved for a rainy day. Watching Your Money tonight, Tom Ziska, Fox 26 News.